The stock market rallied Tuesday following President Trump's announcement he would delay a 50% tariff on goods from the European Union. That tax levy was set to kick in on June 1st, but over the Memorial Day weekend, the president said he would push that to July 9th after speaking with European Commission President Ursula von der Leyen. The announcement, along with new data showing improved consumer confidence for May, caused stocks to climb Tuesday. The Dow Jones up 740 points, NASDAQ up 461, S&P 500 up 118. CBS News MoneyWatch correspondent Kelly O'Grady joins us now. So, Kelly, this pause here that is set to end on July 9th, how significant is the pause and how significant would 50% tariffs be?
So definitely the pause is significant. I think investors, companies, no one wanted to see that 50% tariff go into place on June 1st. I will remind us all, though, that it's really just putting the pause back to where it was, because that 90-day pause on the reciprocal tariffs was meant to end July 9th. And so we're just sort of back to where we were in terms of when the tariffs would kick in. In terms of how significant a 50% tariff would be on goods coming from the European Union, I mean, 50% is a lot. Think about the things that we get from Europe. A lot of cars, pharmaceutical drugs. That would be really impactful for businesses and consumers. And then I also think about what the European Union would do in terms of retaliation. And so then businesses that need to sell to those European consumers would also get hit. So as you said, the markets reacted positively today. I mean, everyone was happy to see the pause, even though no one loved this back and forth over the weekend.
In terms of U.S. exports to EU, are we talking agriculture and then some of the quintessential things we think of, American brands like Levi's?
Exactly, and liquor too, right? Bourbon.
So let's go to this consumer confidence data. We had seen month after month a decline. What does this new report tell us?
Americans are more positive about the economy. We saw 5 months of straight declines, and this was really driven by May 12th. So this data, you can see a lot of the survey responses came after May 12th. May 12th is important because that was the date that China and the U.S. came out and said, hey, we're going to negotiate. We're going to drop some of these tariffs, and there was a sigh of relief breathed into the markets, but clearly consumers as well. And you saw there was data in here where consumers said, I am actually going to plan to spend more money on big appliances, on vacations, on cars, on homes. That was up from April. So we're not out of the woods yet by any means, but it was certainly a welcome change that consumers are feeling more optimistic.
It's also, though, not every demographic that's saying that, right? This is almost a story of like the haves and the have-nots.
I thought this was really interesting. There was a new question they added this report. It basically said, are you changing your spending habits or your financial behavior? Those folks making $125,000 or above said that they plan to purchase, and they're in fact saving more to purchase goods in the future. Those making under $125,000 said that they are struggling, that they've moved into their savings in order to make ends meet, and they've put off purchases. So as you said, haves and have-nots, there's a different story there.
Yeah, it's very striking. Let's talk about the new data showing Tesla sales in Europe. What's going on there?
A 49% drop in April versus the previous year. And by the way, that happened at the same time that you saw a 34% increase in electric vehicles in Europe.
Wow.
So it's a really big difference there. A couple things are going on. We have seen brand damage with protests erupting at Tesla properties across Europe. But your Chinese company BYD also got into the market and started selling. They have a cheaper, what many consider better product than Tesla that has not brought new cars to market there for quite some time. So there's a couple of different things driving that loss.
Okay, Kelly O'Grady, I always appreciate you. Thank you.